Greetings, members one and all of the Salivation Nation. Gold and silver continue to drop a little bit, and the dollar continues to climb a little bit. Let's take a look and see what's going on. This is coming to us from Market Watch. Popular dollar index climbs, and the metal prices trade broadly lower. Gold prices headed lower for a third straight session Tuesday, with a key dollar benchmark strengthening on the back of the weakness in the euro and British pound as traders eyed news tied to the UK's exit from the European Union. U.S. stock indexes were mixed, offering little support in the haven metal, even as remarks from President Donald Trump stoked fresh anxieties about the prospects of a near-term resolution of trade tensions between the U.S. and China. It was noted that the iPhones could see a $10 tariff or tax on each iPhone that comes through, and also laptops as well. And we've also seen some issues with relation to General Motors, and some say, well, GM or as being subsidized. They were one of the ones that were bailed out during the 2007-2008 crisis, and they've been producing vehicles that really not many people have expressed much interest in, the Cruise being one of them. So they're restructuring as part of such. They are laying off a lot of people and could close down as many as 5 plants. But other criticisms of it could be, a lot of it could be due to the tariff deals that are occurring. So we'll see how that all plays out in the end. Larry Kudlow was interviewed about it and said that it is bad news, but overall the economy is still doing well. But I believe it is fragile, and I believe that there is some concern, legitimate concerns over the tariff situation. We'll see how it plays out, and if Congress will approve and bless the agreement between Mexico, Canada, and the United States. Gold for December delivery was down $5.90, or 0.5% after the recording of this video, at $12.1650 an ounce. Gold for February delivery was down 0.65%, which is higher open interest volume, shed $5.20 to reach $12.2350. December silver traded down 5.5 cents, or 0.4% at $14.15 an ounce. The March contract was down 5.8 cents, or 0.4% at $14.28. It's amazing that silver has really struggled to stay above that $14 mark. It has dipped down maybe once or twice to the 13s, but it's stayed pretty much at that floor. Seems like $14 has been sort of the floor for silver, and for gold, it's right around $1,200 where it's dipped down. I think gold has stayed below $1,200 longer than silver has stayed below $14. This special drawing rights gold shares and iShares Silver Trust were each down by about 0.1%. The VanEck Vectors Gold Miners ETF shed 1%. Now, the dollar index is probably one of the biggest reasons why it's up 0.33%, advanced 0.3% to 97.326. There's some people in the industry, in the gold and silver industry, that predict that the dollar could climb to its highs that last seen in the 80s. And we shall see. The euro and the British pound were down versus the greenback as traders look to the latest news on Brexit developments. A firmer dollar typically dulls demand for U.S. price commodities, including gold. The European Union has given approval of Britain's divorce from the trading bloc. If the deal is given the green light by Parliament, the UK will then be able to focus on negotiations for new trade and security relations with the EU after its official exit in March of 2019. Of UK Prime Minister Theresa May, however, is seen as facing an uphill battle in winning parliamentary approval. The dollar has moved higher after Federal Reserve Vice Chairman Richard Clarida said in a speech Tuesday that the U.S. Central Bank's interest rate policy should be aimed at sustaining economic expansion and that gradual interest rate hikes are the best way forward. So it seems like they're trying to be a bit more timid with the hikes. And, I don't know of a time, at least in my knowledge, where the interest rate hikes have been anything less than a quarter point. And that's all they've been doing. I don't think they've done a half point rate hike in the times, at least, that I've been paying attention. The dollar supportive and gold negative rate increase is widely expected next month. But the expectation for the pace of rate moves next year has shifted as of late. Fed Chairman Jerome Powell speaks on Wednesday. Clarida had previously offered a relatively dovish monetary policy outlook, saying that he sees signs of slowing growth and that sluggish expansion in the globe will be factored in the central bank's calculus as it attempts a normal interest rate policy. Some of you may remember that Trump has been highly critical of the Fed for raising rates as of late, but we'll see how it plays out. Both Clarida and Powell conducted interviews 2 weeks ago that caused some shock in the markets, hurting the dollar and yields and supporting gold, said Marshall Gittler, chief strategist at ACLS Global. Rate expectations have been heading down ever since the Fed statement following the November FOMC meeting. The decline accelerated after Powell and Clarida were interviewed on TV. Next, attention turns to late week meeting between Trump and China's President Xi Jinping. If a trade deal were to be reached, our assumption is that import duties will be lowered again, which would push down import costs and therefore be disinflationary, said Fawad Razada, the market analyst at Forex.com. That in turn should further reduce the urgency from the Fed to rate hikes and lead to a rally in bond prices and drop in yields and the dollar. As a result, gold should react positively, especially the stock market and the economy continue to remain under pressure. Other metals and COMEX trading broad and lower, with March copper down 1.39% at $2.75 a pound, $2.75 a pound. January platinum shed 0.4% to $844.40 a pound, and March palladium fell by nearly 0.9% to $1,114.40 a pound. Let's take a look at the precious metal prices and kind of take a look and see where things are. We can see as of right now, gold at $12.1539, silver is at $14.17, platinum is $839, and palladium is at $1,156.50, up 0.65%, $7.50. Here's a chart of gold, and we've seen over the last since September where it's kind of maintained rather stable prices here, but again, it's dipped into that below $1,200 range several times for sure. But now it's other than this past November, it got right to that floor of $1,200, and now it's staying pretty steadily above that $1,200 range. In fact, it's been well above $1,210 since the 14th of November. So it's very interesting to see how this will play out in the long run. If we do see another rate drop or rate hike, some say the prices will go down. Now, as you know, I made predictions, horrible predictions by the end of the year, but I'm going to make another prediction that I don't think we're going to see gold go below $1,200 before the end of the year, even with a rate hike. And I don't think we'll see silver go below $14. And those are risky predictions to make, but of course, since they're both kind of, especially silver is flirting with that low 14s right now before this rate hike, but I think in some ways these are baked in. And but so I feel that if they do raise rates, I think that we will see the gold and silver relatively stable through the end of the year, and with not falling below $1,200 for gold. I feel more confident about that one than I do silver dropping below $14 an ounce. So post your thoughts about where you think prices will be and about the news, especially with Brexit coming up and what the British Parliament will do, because there's some trade situations that will occur there that could have an effect on the markets. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.